Hey everyone, and welcome back to another video for today. So, Advanced Money Destroyer, now yes, still Advanced Money Doubler, although we are experiencing a drawdown of 22% from the recent highs, but all in all, year to date we are still up 70%. Yes, at one point we were up more than 115%. Now we know what has happened more recently, right? More recently we've had a broader market pullback, a broader, let's say, pullback because of the questions around OpenAI, around Oracle, around an AI bubble, and then more recently, the Google TPU story, which we covered yesterday. I'm not going to go over all of that again. Now, AMD currently is a company worth around $335 billion. Yes, trading PE is very high, but look what happens when you look forward. You're not buying AMD from the past 12 months. You're buying the AMD of the future. And the AMD of the future is going to be worth a lot more than what it is today. It's trading at a 37.2 times forward PE. EV to EBITDA 34.4 times. It's expected to grow earnings quite rapidly, compounded over the next 2 years. Margins are expected to go up. Right? We've talked about that, all of the results from the Financial Analyst Day. Nothing here has changed. Right? People think that because AMD was previously at around $260 or so, and now we're at $213, we were closer to $200 a couple of days ago, that something has changed. No, the only thing that has changed is probably sentiment and the price of the stock. So let me remind you why we are still bullish, or why I am still bullish on AMD, but why I'm also not in a chasing mood right now. There are specific prices where, yes, I would love to buy AMD. I don't think they will happen, but if they do, I'll definitely take advantage of that opportunity. Now, if you enjoy these type of videos, hit all the buttons. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And also a special thanks to Fiscal.ai for sponsoring this video. They're having one of their biggest sales of the year. They usually have 1 or 2 sales. You're getting 30% off any plan that they offer. You'll also get, of course, if you're a new user, Fiscal Pro for free for the next 2 weeks. This promotion runs up until Monday midnight. So make sure you take advantage of that. There is a link down in the description and in the pinned comment. And of course, thank you to everyone that has been using the code, the link over the last couple of months. Now, I also want to remind you that this still is the story of AMD. AMD at $80, nobody wanted to talk about it, right? Nobody wanted to buy it. Right? We made fun of the name Advanced Money Destroyer. Everybody was saying, oh, it's going to go to 50, it's going to go to 40, it's not really a good competitor, etc., etc. Funny enough, at 250, 260, this is the next trillion-dollar company. This is the best, right? Also funny enough, yesterday, suddenly it's back to the same sentiment as 80, as if we didn't double, more than double, right? It's like, oh, AMD is not really a competitor. They will never compete. Well, friendly reminder. If we go and look at what the analysts are expecting currently, what the analysts are expecting AMD to do, again, all powered by Fiscal.ai, we can see that this year, revenue are still expected to grow 28%. But right now, and I think this is very wrong, and this is why we're going to see a little re-rating, especially towards the end of 26, when we are going to see the launch of the MI400 series. In fiscal 26, AMD is expected to grow only 21.4% and then only 16.9% in fiscal 27. I think that's too low. Looking at EPS, they're expected to generate $7.40 in EPS in fiscal 27. Looking at free cash flow is still expected to grow faster than revenue over the next 2 fiscal years to reach $10.3 billion in free cash flow in fiscal 27. Now, if we go and look at what they said during the Analyst Day, this is what we should expect them to deliver over the next 3 to 5 years. So now we have a roadmap. Now we have something to hold them accountable to, right? If they can achieve those numbers, great. If they cannot, then the stock will be hit and questions will be asked. But we know that Lisa Su is usually quite conservative with their goals. So revenue growth based on 2025 outlook for the next 3 to 5 years, they expect it to grow above 35% compounded based on data center momentum and share gains. Gross margins to be between 55 to 58%, operating margins over 35%, free cash flow margin around 25%, and EPS over $20. I'll remind you that EPS for fiscal 25 is expected to be around 4. So that's a 5x increase in earnings per share over the next 3 to 5 years. And people think that paying a 34 times forward PE is too much right now. You're paying what? 11 times that $20 EPS? 11 times that number. Okay, there is a big difference between achieving that in the next 3 years or 5 years. But still, 2028 or 2030, 2031. Over $20. If they achieve that, yes, then I do think that AMD today is cheap. And I'll remind you, gross margins 55, 58, we're now closer to 54%. Operating margin above 35% and free cash flow margin 25%. If we go and look at what they're doing right now, 17% free cash flow margin and 9.5% operating margin. So again, there is a long way to go here with AMD. And that didn't change, right? If we go and look here at the transcript, we look at the transcript, we can get all the information, you can search for it, you can look at the report, the slides, or just click on the AI summary. This was done 2 weeks ago. 2 weeks ago, so you're going to tell me that suddenly in 2 weeks, the whole thesis has changed? No, the whole thesis did not change, not even since they reported, right? The Q3 results were quite good. And remember the sentiment, right? Remember what we said after we covered the Q3 results. The numbers were great, right? This is a company that generated $9.2 billion in revenue, up 36% year over year. But in the call, what did we say? Well, we didn't really get that much information, right? Yeah, we got the usual, right? We got the reiteration of that OpenAI deal and then also the Oracle one. Now, the problem, of course, is that OpenAI and Oracle are two of those names where the market right now is still quite skeptical on the fact that, okay, they don't really have the cash, so how is all of this going to work? Now, luckily for us, Oracle will report their quarterly figures in 2 weeks or so. With OpenAI, well, we'll just have to wait and see what happens, and maybe sometimes we'll get leaked numbers on the revenue that they generate, the monthly active users, according to Brad Gerstner, that's back to around 900 million or so. Or we'll wait until they go public and then we can really look into that company. But all in all, to come back to the main point, AMD, nothing has changed other than the price of the stock and the sentiment. The outlook is still the same. And if you think that in 2 weeks, their outlook 3 to 5 years out is suddenly, poof, gone, then I don't think we can take you seriously. Now, I will say this, and this is something that I've said for a while now. OpenAI, yes, is the issue, I would say. Because one, it's that huge company that's private. We don't really know what's going on there. And they do have quite a lot of deals with a lot of companies. Now, with AMD specifically, we know that before they announced that huge deal with OpenAI, they were at around $170, and then we've got that huge jump, right? That huge gap that the stock did close a little bit, a quarter of it, right? When we went to $195 or so on Tuesday and on Friday. Now, this, if we do have, again, a pullback, the whole market, and maybe after Oracle reports, suddenly they report something bad, or maybe RPO did not increase as expected, then we might suddenly see a pullback. And then yes, if we do close that gap and we do reach $170, then why wouldn't I buy more shares at those prices? Because at those prices, we're basically back to before the OpenAI deal. So if we say that the OpenAI deal is still the risky part here, if we still say that we're skeptical about the fact that maybe OpenAI will not be able to pay for the MI400 series and the MI500 series because they cannot generate the revenue, then I'll be fine paying the price of before the announcement. And guess what? If OpenAI does generate the necessary money to buy the chips, then you're basically getting everything else for free because we're buying the stock pre OpenAI announcement while still trading based on today's AMD's business. Now, that said, will we go back down? I don't know. And so in the meantime, this is a hold for me because I already have a nice position and I'm fine waiting a little bit. Now, if we do a quick reverse DCF here for AMD, we plug in the free cash flow trailing 12 months, terminal growth rate, I'm basically using the 10-year yield right now. Discount rate is basically the 4% plus the implied equity risk premium of 3.73%. You can add execution risk, we'll do that in a bit, and then dilution of 3%. AMD will have to grow free cash flow for the next 10 years by 18.5%. 18.5% growth every single year. Is it possible? I think it is. I think they're expected to grow very, very quickly over the next couple of years. They're expected to grow free cash flow over the next 2 fiscal years much faster than this. And then, of course, there is this MI400, MI500 series that will kick in. And based on the numbers that we've seen from the analyst day, well, I do think that this is definitely possible. Now, if we do add here an execution risk, then it will have to grow at 22%. I think that's much closer to reality. 22% every single year for the next 10 years. I think that's realistic, right? And that's the price that you're basically paying right now. And I'll go back to the uber bullish side of things. Some people will say that it is still extremely cheap because, well, data center business is expected to grow at over 60% compounded over the next 3 to 5 years. Core business over 10%. And so overall, we're reaching the 35% CAGR over the next 3 to 5 years. All in all, every single business line here for AMD is already doing very well right now. We are now waiting for it to enter acceleration mode. And I do think that 2026 is going to be that year. Now, we will have to wait, of course. The MI400 series is not going to come out 1st of January. No, we will have to wait probably mid-2026, and then it starts to ramp up. But in the meantime, this is a business that is doing extremely well. This is a business, again, I don't think it will become the next NVIDIA. No, but the market clearly is big enough. The market is clearly big enough to have NVIDIA, to have ASICs, and to have AMD. AMD literally just has to grow faster than the market, and it takes market share, and that's good enough. That's good enough, and according to their own estimates, that's exactly what's going to happen across the board. Again, you might be skeptical about it because you might have not followed AMD for quite a long time. You might not know that Lisa Su is usually quite conservative, so the fact that they are putting those numbers out, to me, means that those numbers are achievable. Of course, just like with every other company out there, execution is key. Now for Q4, these are my expected number. I think they'll reach that quite easily, $4.74 billion for Q4. Data center, purely data center. Now after that, we'll see, because next quarter, we could be getting already some comments on 2026. I think that will also be a lot of the attention during the earnings call. Knowing Lisa Su, knowing those earnings calls, well, unfortunately, I don't know if we're going to get that much information, but we'll see. We'll see. All in all, I mean, this is what you get when you see a business that is executing quite well across the board, and it just requires patience. They're talking here 3 to 5 years, not 3 to 5 months. I know some people think that this should be a $1 trillion business today, but no, I don't think so. I think it's more realistic to see the business at where it is right now. And then if it does execute well, then it is going to be a $1 trillion business by 2030. And that still is one heck of an outperformance, right? We're now what? $335 or so billion in market cap. It's a 3x in 5 years, less than 5 years. Still pretty good. Maybe people are just too used to finding multi-baggers in a matter of a couple of months, but 3xing your investment in 4 to 5 years is goated. And so all in all, that's about it for me in this video. Stay focused on the long-term success of AMD. We now have numbers to work with. We now have goals where we can see, are they going to achieve it? Is the goalpost moving? Yes or no? These are things that we didn't really have previously. Yes, we've had announcements. But now we actually have goals for the next 3 to 5 years, and we can see. We can see next year, right? If they're already moving towards it, or if they're still far, far from it, maybe in 2027. These are the important things. Now we're definitely not flying blind or anything. So if things go the right way, we will see it. But if things don't go the right way, we will also see it. And then, yes, we can adjust our strategy to say that, oh, this is the no-brainers of no-brainers. This is going to be a $1,000 stock, etc., without actually thinking about how they have to get there. It's not responsible. But right now, yes, I'm still bullish on AMD. I wish we could go back to 170. And if not, fine. If I get more information from the company and the numbers are even better to pull down the valuation or the price that I have to pay for AMD, I'll continue to accumulate more. No problemo. So, all in all, that's about it for me in this video. Do check out fiscal.ai to get 30% off up until Monday night. See you all in the next one. Bye-bye.